Hey everyone, I'm Victor, the investing group leader for the Financial Profit, which you can find here on Seeking Alpha. I'm going to quickly show you how I use Seeking Alpha's premium platform to find and analyze stocks for my service. So the first thing I typically look at is the summary page. Now, in the summary page, I like to focus on the short interest because I like to see how much of the market is betting against a certain stock. Because if the short interest is too high, especially in a well-established company, then that is a clear red flag to me. I also look at key statistics like the market cap, the forward PE ratio, and other factors. Now, next, I like to go to the ratings page because here on the ratings page, first we have the very interesting quant rating system. Next is the Wall Street analyst ratings. Now, this section shows you some very and interesting data. Like, for instance, the average price target based on a certain number of analysts. Like AMD has 51 analysts covering it here. And based on these 51 analysts, we see that the average price target is around $282.40, which is about 37% above AMD's current stock price. We also see that the lowest price targets are around 178, which is just slightly below where AMD stock is right now, illustrating that the risk reward looks pretty good in a company like AMD. This dynamic also illustrates that the downside could be limited here, and there is much more upside potential than downside risk, making the risk reward very favorable here in my view. Now, next, I like to move on to the most important section by far, which is the earnings page. Now, here I like to look at the latest quarterly earnings because we want to see how the company has been doing recently. And we also, more importantly, want to see how the company will be doing in the future. So upcoming quarters earnings are extremely important. Down here, we can see the EPS trend over the last 4 quarters and the projections going into the next 12 months. Now, another very interesting section is down here, earnings history, where we can actually see what the company's earnings have been over the last 5 years or the last 20 quarters, which gives us a good understanding of whether a company is a stable company with stable earnings. Is it a riskier stock that has erratic earnings? Is it a earnings company? Is it a pre-revenue company? Is it a well-established company like an AMD with solid earnings and probably more importantly, considerable EPS and sales growth potential? Now, after this, I usually go to the earnings estimates page where I conduct the bulk of my analysis. Now, here we can look at the consensus revenue estimates. We also have the lower and higher end estimates, and we see that even going by the consensus figures, AMD should produce relatively robust 30 to 35% year-over-year sales growth in future years, which is extremely healthy. But more importantly, we want to focus on the EPS side of the equation for a well-established company. So something like AMD, while the consensus estimate is for $6.42 next year, my EPS estimate is actually a little bit higher because consensus analysts can be behind the curve a little bit. So I believe AMD could earn about $7 next year. So to derive the forward P ratio, I would then divide its current stock price of around 200 by my EPS estimate, which is $7, which would give us a forward P ratio not of 32, but of about 28. Now, next, what I like to do is I really like to dig into the valuation. And the only way to really do that is to derive the price to earnings growth figure, the PEG ratio. And the way that I do it, I have my own special formula, and I use it based on the numbers here on the Seeking Alpha platform. Is I would take, for instance, I want to average out the year-over-year growth rate, because to get a proper price earnings growth ratio, we don't just want to use 1 year, because then we're going to get a skewed ratio, which is pretty much useless. So what I would do here now is I will take the 3 forward years. So I would take the 62% year-over-year growth rate, add the 56% plus the 40%, which would give me a number of 158. Now I divide that by 3, which gives us an average EPS growth rate of about 53% over the next 3 years for AMD. Therefore, AMD's year-over-year earnings growth rate for the next 3 years could be about 53%. Now, why is this important? It's important because this is a very significant EPS growth rate. Now, to get the PEG ratio, we will take the 28 forward P that we derived, and we would just divide that by 53. Now, not 53%, but just 53 in nominal terms. And we get a forward price to earnings growth ratio of only 0.53 for AMD, which is extremely cheap. And going by traditional valuation metrics, if you think of Warren Buffett, Benjamin Graham, their investment playbook, so to say, they would tell you that a value company trading at a PEG ratio of 1 or lower is considered relatively inexpensive. However, AMD is not a value company, it's a growth stock. Therefore, we can use a benchmark PEG ratio about 1.5. Therefore, if the PEG ratio is below 1.5, then AMD is presumably considered relatively inexpensive. Now, in our case, we see that the forward PEG ratio is 0.53 for AMD, which is only about 1/3 of 1.5. AMD, even at $200, is still extremely cheap. And what does this tell us? This tells us that even if AMD's price tripled to $500 or $600, it would still be considered relatively inexpensive or fairly priced based on the PEG ratio, because then it would have a PEG ratio of about 1.5. Well, I hope you took something new away from how I use the Seeking Alpha Premium platform to do research on the stocks we own in our all-weather portfolio at the Financial Profit. Now, don't forget to click the link below this video to check out my investment group, The Financial Profit, the #1 service for proven portfolio profits on Seeking Alpha. Now, I hope to see you in there soon. Thank you very much for watching, and have a wonderful day.